Okay, let's start now. Guys, let's start now. We'll continue with our discussion on standard costing. It should get over maybe in another 1.5 hours, and then we proceed to next area. Now, in standard costing, I had given you some homework questions, so let's quickly discuss them first. Question 34 was a homework. Here, the only part which may need a little bit of a computation from your end is to calculate what is the actual or what is the overhead absorption rate. So if you see here, 52 workers are employed on an average for 25 days a month. They work for 8 hours per day. Normal downtime is 15%. So once you subtract this 15%, you will get the budgeted working hours. You will compare that with the budgeted variable overhead, budgeted fixed overhead, and get the overhead absorption rate, or technically called SR per hour. SR per hour would be computed with that. SH and AH is directly given in the question. In this question, you cannot use those conversion factor and all. No AO type calculation. Only you will have to go with SH and AH. SH and AH is directly given. First job is to calculate this. This is where you will spend a little bit of time. 85% into 52 into 25 days into 8 hours. That will give you the budgeted hours. That will give you the variable overhead per hour as well as the fixed overhead per hour. Once this is done, balance is more of a formality in this question. Also, they've asked for variable overhead expenditure variance efficiency. Fixed overhead budget. Budget means expenditure. This could be one learning for you. The other name for budget is your expenditure variance, capacity variance, and efficiency variance. The question does not have data on actual days and budgeted days. Hence, calendar variance is not applicable. You do not have calendar variance in this question. You have actual days as well as, you do not have actual days as well as budgeted days. So, this once you calculate, this is directly given, this is directly given, this is directly given. All the three are directly given. Once you calculate this, this is directly given, this is directly given, this is directly given, this is. So everything else is directly given in the question. Question has also asked for capacity ratio, efficiency ratio, and activity ratio. For ratios, you'll have to just write the R's component. So when you put your chart, we write SR and then we do SH, AH, BH. No SR into SH, just SH, AH, and BH. SH by AH is efficiency, AH by BH is capacity, put together is activity. We also have calendar, which is not asked in this question because data is not there. Any doubts on this question? Any doubts on this? 35 we did in class. 36 we did in class. 37 we did in class. 38 is similar to 37. The only difference between 37 and 38 is in 37 these rates were directly given and the numbers were not huge. Here you may have to add up everything. So SR per unit for variable overhead is 1500 and budgeted fixed overhead is 200 into 3000. 200 into 3000 because it was, the estimate was for 200 units. Actual data, you will just put a normal addition. You do not know which is variable, which is fixed, how to bifurcate, all that is not possible. So if I go back to this question, variable overhead per unit is 1500. If I look at in this question, if I just do a comparison, fixed overheads per month is 200 into 3000, which is 6 lakh or 3,000. Yeah, 6 lakh rupees. Then actual overheads incurred is, you just need to put a total 4 lakh plus 2 lakh, 6 lakh plus 175, which is 775 plus 375, will all put together will be 11 lakh 50,000. So you just need to put a total and actual output could be there in the question and then you start calculating. It's exactly same as 37, just that the numbers are given differently here. Any doubts on 38? 39 is similar to the first homework question which I discussed today. I had discussed the first homework. It is similar to that. You will have to first calculate the SR. There alone you may have to spend a little bit of time. That is 120 machines into 8 hours per day into 25 days a month. Here the OAR is based on machine hours and not labor hours. It doesn't really make any difference to us. Instead of calling it as SHS standard labor hours, we'll call SHS standard machine hours. It is just machine hours The fixed overheads is estimated to be 1,44,000. Standard time required for 1 unit is 4 hours. This is the standard equation. 1 unit equal to 4 hours. The company worked for 24 days of 840 machine hours per day. 24 into 840 is the actual hours, and 5305 is the unit. So 1 unit is equal to 4 hours. 5305 units is equal to question mark. They have asked for expense variance, volume variance. They have not asked the bifurcation. Still, I have ended up doing all in the solution, but what is needed is only the expense variance and the volume variance. They don't want capacity, they don't want efficiency, they don't want calendar. That breakup is not asked in the question. Any doubts on this? Clear? 40 we did in class. 41 we are yet to discuss it. Okay, okay. So today we'll be doing that. 42, okay, yet to do it. 43 done in class. 44 done in class. 45 homework. Okay. So they have just asked for material cost, labor cost, fixed overhead cost, variable overhead cost. For everything, what you do is standard material cost minus actual material cost, standard labor cost minus actual labor cost, standard variable overhead minus actual variable overhead, standard fixed overhead minus actual fixed overhead. The actual is this 5 lakh 25, 1 lakh 55,000, 2 lakh 93, 4 lakh 70. What is standard? From based on 4,800 units, you will have to calculate the SQ. 4,800 into 10 by 1, that is a standard quantity. Standard rate is 10 per kg. Standard rate is 10 per kg. When it comes to labor, 4,800, 1 unit is equal to 6 hours. 4,800 units is equal to question mark SR into SH. SH is 5.5. Sorry, SR is 5.5. Same SH you continue in variable overhead into 10 per hour. And when you do here into 15 per hour. Into 15 per hour. It is, there's no use in doing the table here. I can directly do it without the table also. Your wish, you want to do table, but we don't need all columns. Last column, first column, only 2 columns you will need, because they've just asked for the cost variance. Any doubts on this? 46, okay, pending. Okay. 47 done. Okay, 3 questions are pending, so let's start with 46 first. Go through question 46. Go through question 46. Go through the question. Okay, let me start discussing this. Ahan Limited operates a system of standard costing in respect of one of its product AH1, which is manufactured within a single cost center. Standard rate per unit. This is a very useful information. They have not given in a table form, they have given in words. Normally we have a table for standard cost sheet. Here what they are saying is 20 is to 1 is the input output ratio, 24 is the SP for material variances, 72 per hour is the SR, 5 hours equal to 1 unit is the standard equation. Fixed production overhead is 100% of wages cost. If it's 100% of wages cost, whatever is the SR per hour for wages, same will be the SR per hour for fixed overhead because it's 100%. If they said it is 50%, then that is 72, this will be 36, 50% of that, because your fixed production overhead is absorbed at the rate of 100% of wages cost. This is nothing but you would have learnt in overhead chapter the OAR. The OAR can be per labor hour, per machine hour, per percentage of wage cost. So here it is 72 per hour for labor. Same 72 per hour will continue for fixed production overhead. Some actual data is given and some variances are given. Now, whenever variances are given, our objective is to first complete the computation table. When I complete the computation table, I will not look into what and all this is. Let me not get into that. First objective is to complete all the computation table. We'll start with material variances. We may be able to complete it. We may not be able to complete it also. If we are not able to complete, we'll give a pause, move to labor. If you are able to complete, great. Otherwise, give it a pause, move to the next. Somewhere, some variances will give us the information which will help us in completing all the three table, because which table has issue we don't know. So we'll first start with material variances table, complete the table. Once the table is completed, all the three, then I will look at what they need. So for example, material cost variance will come from table 1, we'll calculate it later. Budgeted output, I don't know from which table it will come, we'll see it later. Quantity of raw material purchased will come from your material variances, so we'll fill that later. Actual output can come from some table. Actual hours worked should ideally come from labor variances. Actual wage rate per labor hour should come from labor variances. Labor cost variance should come from labor variances. Production overhead cost variance should come from your overhead variances. So we'll first objective is to complete the table. Once that is done, we'll see what is the requirement of the question. Working note 1, computation table for material variances. Computation table for material variances. Whenever variances are given in the question, it is reverse working. Objective is to always complete the computation table. Single material, multiple material. So let's put the table SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. Whichever information is available, let me know in this. SP is how much? With 24, two places. Whichever information is available, let's write that. 24 at two places. What else do you have? AP is also available. How much? 22. Okay. Then I will see variances. First, look at in the question. Do you have any other information? Do you know SQ? Do you know AQ? Any other information? If not there, then we'll take the help of variances. Any other information do you have? No? Okay, what are the variances we have? Related to material, which variance you have? Material price and material usage. Now listen. What is the formula for material usage variance? SP into SQ minus SP into AQ. I cannot use it because I don't have SQ, I don't have AQ. Two missing information, difficult for us to work. Material usage variance, I am not using it because SQ is missing, AQ is missing. One missing information, I can find it. Or I'll try to form some equation and all, but we'll see later. As of now, I'm not using it. Material price variance, what is the formula? In case you are not sure on the formula, please open the theory note separately and then tell me the formula, because I cannot spend time on giving you the formula, giving the chart again and again. By this time, for me in my mind, I'm very clear what is the formula, because I'm able to visualize the chart in my mind as of now. So you should reach that stage where you're able to visualize the chart. Tell me what is the formula for material price variance? SP into AQ minus AP into AQ. AQ is the only missing in this formula. So we will get the AQ now. Come down. Material price variance is equal to SP into AQ minus AP into AQ. SP into AQ minus AP into AQ. How much the material price variance given? 4,80,000. 4,80,000 is equal to 24 AQ minus 22 AQ. 24 into AQ minus 22 into AQ. How much is the AQ? 2,40,000 kgs. I think raw material is measured in kg in this question. Yeah, per kilogram. 2,40,000 kgs. Objective is always to complete the computation table. So put 2,40,000 here. I am not teaching anything new. I am basically doing revision. So it is like doing revision. That is how standard costing is. In the class itself, revision is happening. The last session was also fully revision only. Today also three sums we are going to do. All are like revision into 2,40,000. Now I will use the usage variance. Now I will use the usage variance. That will give me SQ. Next, material usage variance equal to material usage variance equal to, what's the formula? SP into SQ minus, how much is the usage variance? Favorable, adverse? Favorable. Okay, 48,000 is equal to 24 SQ minus 24 into 2,40,000. 24 SQ minus 24 into 2,40,000. How much is the SQ? 2 lakh. I know you cannot make errors here. Please, guys. Kgs. 242 kgs. Again, I'm repeating, I am not going to teach anything new in standard costing. I am technically doing only revision. 24 into 2,42,000. Any doubts on this? Table is over. Let's first close this. 24 into 2,42,000. 24 into 2,40,000 and 22 into 2,40,000. Before I start on labor, I need to do one more calculation. First complete this. Any doubts on this? Every problem, the crux or the most important requirement will be AO, because AO is needed to do labor variance. AO is also needed to do overhead variance. If we have got SQ, let's use the equation. SQ is equal to AO into input by output, and let's get the AO also. Because if I had not got the SQ, I wouldn't have tried AO here. Let's close the AO part also, because AO will be needed later on. Because when I do labor variance, if I want SH, 1 unit is equal to so many hours, SH is equal to AO. AO will be needed. So let's get the AO part also. So next point, any doubts till this? Any doubts on this? Can you proceed? Now write AO is equal to, sorry, SQ is equal to actual output into input by output. Actual output into input by output. SQ equal to AO into input by output. Input by output. 2,42,000 is equal to AO into 2,42,000 is equal to AO into, I read that initial part, I told you the input output ratio. How much is the input output ratio? 20 by 1. Tell me the AO number. 12,000. I'll measure the output in units only, because they said per unit. Raw material was in kgs. This is in units. 12,100 units. Any doubts on this? I think balance part will become very simple, because AO once computed, it will make it very simple for the balance part. Any doubts till this? Next, let's do working note 2. Computation table for labor variances. Computation table for labor variances. You try attempting it. I'll be back in 2 minutes. Single labor, multiple labor, with idle time, without idle time, without idle time. So three columns only. SR into SH, SR into AH, AR into AH. Whatever is readily available, let's first copy them. SR is 72, SR is 72. This is 4392. I don't know the breakup. I'll see the breakup part, but it is 4392. Because we have already done AO, we should calculate SH. We have already done actual output calculation. So let's do the SH computation. Note 1. I hope you have already done this computation of SH was a standard equation. 1 unit equal to 5 hours. AO equal to ST. AO equal to ST. How much is the actual output we calculated? 12,100 units equal to question mark. What is the answer you get? 60,500 hours. This is on the SH part. Clear? Then we will now take help of some variance and proceed ahead, because we have already done whatever is possible. We'll take the help of some variances. Any doubts till this? This should be simple, straightforward for it. Which variance is given in the question? Rate as well as efficiency. What is the formula for rate variance? SR into AH minus AH. I can use that and get the AH number. How can I get the AH number? Because AR into AH is fully known to us. AR into AH is fully known. SR into AH, in that SR is known, AH alone is missing. So let's do labor rate variance equal to SR into AH minus AR into AH. Labor rate variance equal to SR into AH minus AR into AH. How much is the labor rate variance? 69 120 is equal to 72 into AH minus 43 lakh 92,000. AR into AH is known. 72, 69 120 favorable, adverse. Adverse, then minus. Adverse is minus 69 120 is equal to 72 into AH minus 43 lakh 92,000. Formula part I will not spend time again. I'm making it very clear. Formula is something you should manage by now. What is the AH number? 16 60 040 60,040 72 into 60,040. Please tell me the breakup here. Something into 60,040 is 43 lakh 92. Some number into 60,040. 43 lakh 92 breakup, you should tell me now. 73 point into 60,040. This table is done. Objective is to get the computation table. Once that is done, we can see what are the requirements. Clear on labor variances. Let's move to overhead variance. In overhead variance, question has clearly used the word fixed production overhead. So these are fixed overhead variances. Do you have data on actual days and budgeted days in the question? Any information on calendar variance asked in the question? No. So this is without calendar. Working note 3, computation table for OH variances. Computation table for OH variances. SR into SH, SR into AH, SR into BH or technically BFOH. I'm not using the conversion factor and all. I don't want them. In a comprehensive question, mostly we will copy paste the SH and AH. Mostly we will copy paste standard R's and actual R's. So I may not need the conversion factor. Computation table for OH variances. Table for overhead variances. Okay, now as I said, our SR for labor and SR for fixed overhead is going to remain same. So 72 into what was the SH and the labor variances? Copy paste 72 into 60,500, 72 into 60,040, 72 into 60,040. The last column is 45 lakhs. Last column is 45 lakhs. Any data there in the question on budgeted fixed overhead or budgeted hours or budgeted units, anything there? If not there, we'll see. Any information in the question with respect to budgeted fixed overhead? If not there, we'll see later what to be done. Anything available? No, that doesn't help me. It is just telling that your rate is going to be same. Fixed production overhead absorption rate will be same as what is there for. That is why I copy pasted 70 to see. If you see this SR into SH and our fixed overhead SR into SH, both are same, exactly same because the same rate. SH anyway we copy paste. In this question SR is also copy pasted. Okay, what are the variances there in the question? Fixed overhead variance. Which one? Expenditure variance is there. Fixed production overhead expenditure. Tell me what is the formula for fixed overhead expenditure variance? If you don't remember, please check your notes. I cannot help it now. SR into BH minus AFOH. So we will get the third column there. Now write fixed overhead expenditure variance equal to SR into BH minus AFOH. SR into BH minus AFOH minus 1,80,000, 72 into BH minus 45 lakhs. 72 into BH. Formula should be very clear by now. What is the budgeted hours number? 60. So we are closed with all this part now. Now we will see what is asked in the question. Till this we were trying to get the base data. Now we will see what is asked in the question. Can you proceed? Next, working note for solution. This is where we'll start answering the requirements of the question. Beyond this, it's just a formality, but this is where the main solution comes. Working note for solution. For the first requirement of the question, material cost variance is equal to SP into SQ minus AP into AQ. I will not spend any time on explaining the formula. SP into SQ minus AP into AQ. Apply and let me know the answer. SP into SQ minus AP into AQ. Everything is there in your notebook. How much the cost variance? 5,28,000. Favorable or favorable? Okay, 5,28,000 favorable. I could have answered this very simply without even doing all this calculation. Just you add these two, price plus usage. Price plus usage can also give. In an exam situation, if you are not able to proceed with something, at least answer this by just adding it. That's just in case you are not able to do other things. At least this part, just simple addition. What's the next requirement? Budgeted output. What's the standard equation? Now write 1 unit equal to 5 hours. 1 unit equal to 5 hours. Budgeted output equal to budgeted hours. Budgeted output equal to budgeted hours. Somewhere you have calculated the budgeted output. One unit equal to 5 hours. Budgeted output equal to budgeted hours. How much is the budgeted hours? Sorry, 60,000. Tell me the budgeted output. One unit equal to 5 hours. Budgeted output equal to budgeted hours. 12,000 units. Any doubts on this? Can you proceed? What's the third requirement? This is already answered. See, for most of the situation, purchase and consumption is same. AQ is not purchase, AQ is consumption. But most of the time it is same unless they give opening stock and closing stock. How much is the quantity of raw material purchased? 2 lakh 42,000 kgs. Quantity of 40,000. Sorry, 2 lakh 40,000. Clear? 2,40,000 kgs. Any doubts on this? What's the next requirement? Actual, we have already answered this. Actual output equal to how much? 12,100 units. Actual hours worked, this is also answered. Actual hours worked, how much? Sorry? 60,040 hours. Actual rate per labor hour, this is also answered. Actual rate per labor hour. Actual rate per labor hour. Rupees 73.15 per hour. 73.15 per hour. Labor cost variance, SR into SH minus AR into AH. Apply formula and close it. Let me know the answer. SR into SH minus AR into AH. Thirty. Favorable, adverse. Adverse was the last one. Sorry, which variance they've asked? Production overhead cost variance. Technically fixed overhead cost variance. SR into SH minus AFOH. What's the answer? 1 lakh 40 adverse. Done. Any doubts on this? So once the computation table is done, it is going to be fairly simple, straightforward calculation. Any doubts on this? Can you proceed? Go through question 42. Okay, I'll start explaining this major chunk you are going to do. I don't want to spend time on this. KPR Limited operates a system of standard costing in respect of one of its product which is manufactured within a single cost center. The standard cost card of a product is as under. Whenever this is given, it makes it very simpler for us to do the question. Material 5 kg, 5 is to 1 is the input output ratio, 4.2 is the standard price. Direct labor 1 unit equal to 3 hours is the standard equation, and 3 rupees is the SR per hour. Factory overhead SR per hour is 1.2 and SR per unit is 3.6. The production schedule required completion of 40,000 units. This 40,000 is called budgeted output. Required completion of 40,000 units. However, 4960 were completed. AO is 4960. Budgeted output is 40,000. Purchases during the month of June 2007, 2,25,000 kgs of material at the rate of 4.5. Sales data is given. Sales is 40,000 units. Some selling price data. Material variance based on consumption of material. Labor variance and total variance for factory overhead. Income statement showing actual gross margin. Incentive system. Compute material purchase price variance. 3, 4, 5. I'll take you through. There is something new there. Okay. Material variance is simple. Labor variance is simple. Factory overhead, is it variable or fixed? Factory overhead, is it variable factory overhead or fixed factory overhead? Why variable? Fixed also per unit can be there. We have seen every question fixed also they give per unit, variable also they give per unit. Per hour per unit is given for both. We in fact do calculation, no? SR per hour, SR per unit. What else? Why variable? Why fixed? You could be right, but the reason is wrong. So you'll have to tell me a proper reason. Okay, in this question, it can be taken either ways. There is no data to tell this is variable or this is fixed. Per hour per unit does not mean it becomes variable or it becomes fixed. Somewhere some question can use the word like if they ask capacity variance, volume variance, calendar variance, all that is an indication that it is a fixed over it. In this question, I get no indication to treat it as fixed or variable. Your wish, you can do either ways. In class, I'll take it as fixed over it to practice more. In exam, your wish, what you want to do. So first you have to complete material variances, labor variances and factory overhead variances. Almost all the data points are readily available. Exactly 15 minutes for you to do these three. Beyond that, I'll take you through income statement, incentive calculation and some material purchase price variance. 15 minutes for you to do. In case you get stuck, let me know. You want to refer the formula, please keep your theory notebook open and refer the formula. Ideally, I don't want you to refer, you should remember formula by now. 15 minutes exactly starts now. 10:52. By 11:07, I'll start discussing the answers. Nine more minutes. Material variances should have been completed by now. You should have completed material variance and moved to the labor part. 15 minutes is in fact on the higher side, but cheaper. Hello, hello. Give me an answer, please. This will be your first material variances table. I'm not getting into the variances, but this should be the table. Any doubts on this? Any doubts on the table? Are you getting this? Okay. By this time, you should have completed labor variances. This should be the labor variances table. I assume you're at least done till labor. 3 more minutes to complete overhead table. I'm not answering what are the variance numbers and all. I don't want to get into what is the variance itself. You should ideally be in a position to complete it on your own. Any doubts on this? I'm assuming the overhead given to be fixed. You want to take variable can be done. I'm assuming it to be fixed. This should be your labor variance table 3 into 122 880, 3 into 121 200, and 387 480. I've not written the breakup. I don't see a need for that. I've just written the overall number. Any doubts on the labor table? Quickly close the table and the variances. Okay, I assume you are done with all this. Can we proceed? Already more than 15 minutes spent on this. Can we? Done? I am not getting into the variances, but these are the variances. Material cost variance 65,040 adverse. I'll need this to do reconciliation, so I'm showing you the variances. Material price variance 61,680 adverse. Usage 3360 adverse. Labor rate variance 24,240 adverse. Efficiency 5,040 favorable. Okay, solution has taken it to be variable overhead variance. I had told you to take it as fixed overhead variance. The cost variance would still remain same. 47,456 would have been the cost variance. I think that would still remain same. So I'll just give the answer here. FOH cost variance is 47,456 favorable. FOH expenditure variance is 44,000 favorable. FOH volume variances 3456 favorable. FOH efficiency variance is equal to 2016 favorable, and FOH capacity variance 1440 favorable. These should be the numbers. I'll wait exactly for 1 more minute and then I get into reconciliation and other things. Okay, let me now get into the reconciliation other part. Now the question wants us to calculate income statement for June 2007 showing actual gross margin. What is actual gross margin? Is what is the actual profit of the organization. One way of doing it is sales minus all costs will give you the actual profit. Second way of doing it is through reconciliation approach. ICA has used reconciliation approach, but I'll do both. I'll show you both. Now, the original plan was whatever is the cost, my price would be fixed in such a manner that I make a profit of, question has mentioned, 20% on the selling price. In reality, cost can go up, cost can go down. You cannot change the price. You cannot just change the price based on your cost changes, because price is determined at the beginning of the period. Costs are determined at the end of the period. Next, working note, whatever number, income statement. Working note for income statement. Income statement. Note 1 selling price. Note 1 selling price. Note 1 selling price. Cost price plus profit equal to selling price. Cost price plus profit equal to selling price. Was a profit margin, question as mentioned? Some profit margin is there. 20% on. Okay, so I can say sales is 100, profit is 20, cost is so 80 plus 20 equal to 100. Selling price is 100, profit is 20% of 100, and cost is 80. This is the equation. This is the equation. In place of 80, you have 33.60. In place of 80, you have 33.60. What should be 20? What should be 100? You tell me. Do the calculation. In place of 80, the cost is 33.60. 80 plus 20 is equal to 100. 80 plus 20 equal to 100. 80 plus 20 is equal to 100. In place of 80, I have 33.60. What should come in place of 20? 8.4. So selling price is 42. Clear? Now, income statement. This is one way of doing the income statement. Then I'll show you the other way which ICA has followed. Income statement, particulars calculation amount. particulars calculation amount, credit side, particulars calculation amount, credit side, how many units have been produced by the company? How many units are sold? So that balance, whatever is there, standard costing is very clear. Whatever be your cost, it will be valued only at the rate of 33.60 per unit. Whatever can be the cost of the company, closing stock will be valued at the rate of 33.60, because whatever variances you have calculated all are abnormal in nature. You find out what happened. If by finding out you find that there is some issue with the standard, then change 33.60, then change the standard, then you can change the value of the closing stock. So point number 1 is sales, which is, wait for a minute, 40,000 units, and point number 2 is closing stock. This will go in the credit side of trading account. This will go in the credit side of trading account or P&L account. Sales 40,000 is at the rate of 42. Whatever be the cost, I don't know, the cost can be higher, cost can be lower. I cannot now go back and say I want to change the price, because when we fix the fees for you, we have fixed the fees at the beginning of the classes. By the end of the class, our cost can change. I cannot go back to you and tell that you pay me extra or you pay me less. So now write sales bracket 40,000 units, 40,000 into 42. 40,000 into 42. Sales 40,000 into 42. 960 into 960 into, if a company is not following standard costing, then you have to do a cost sheet, calculate what is the actual cost per unit, which can be different from 33.6, and whatever is closing will be valued at that. But here we are very clear, whatever be the cost, closing stock will be at 33.6. This is the credit side total. Debit side, credit side total is 17 lakh 12,256. Debit side, last column of every variance, actual material cost, last column, material cost. What is there in the last column? How much? 925, 200. We have purchased more, doesn't really matter, because what is direct material is opening stock plus purchase minus closing stock, so everything is auto considered here. Material cost 925, 200. Labor cost, last column, 3,87,480. Overhead cost, last column, 1 lakh. Total, subtract it, you will get the actual profit. This is the actual profit. This is one way of doing it. There's another way which ICI has followed. I'll take you through both. Last column of every variance table. Profit 299,576. Profit is 2,99,576. Profit 299,576. Clear? This is one way of doing the profit. Another way of doing the profit is through reconciliation route. Next, alternative presentation. This is what ICI has done. Particulars calculation amount. Alternative presentation. Particulars calculation amount. How much profit we wanted to earn per unit? No, how much is that? Per unit, how much? 8.4. Budgeted profit. Budgeted profit. Budgeted profit. The plan was to sell 40,000 units. Okay, the plan was to sell 40,000. Somewhere it is given the plan, the production scheduled required completion of 40,000 units. So the plan was to sell 40,000 units. So 40,000 into 8.4. We should have earned 3 lakh 36. We should have earned 3 lakh 36. We have earned lesser than that. Why has that happened is what reconciliation is going to do. Budget is 3 lakh 36. For doing reconciliation, I also need sales variance. In this question, sales variance is 0 because the budgeted units is 40,000. Actual units sold is also 40,000. Budgeted price is 42. Actual price is also 42. Sales variance is not part of your syllabus, and that is why in this question profit reconciliation is possible because sales variance is 0. Sales variance is 0. In the last session, I had done one cost reconciliation where we wrote standard cost, added some variances, deducted some variances, and got the actual cost. Now we are doing profit reconciliation. When you do cost reconciliation, you added adverse variance because if you have an adverse variance, cost will go up. Now, if you have a favorable variance, profit will go. If you have a favorable variance, profit will go up. And if you have an adverse variance, profit will go down. So, add favorable variances. Add favorable variances. Underline that. Leave some 5-6 lines. Less adverse variances. Favorable variances and adverse variances. Add favorable variances, less adverse variances. Okay, tell me the first variance in material, not the main variance, the sub variance. How much is the material price variance? Okay, so in the adverse, material price variance, material price variance. So you could keep it as particulars amount also rather than keeping it as calcul. Whatever way you do. Material price variance, how much? I'll write this in inner column 61,680. Let this calculation be like an inner column 61,680. Material usage. Material usage is how much you said? Adverse. Material usage variance 3,360 adverse. All adverse at one place, favorable at one place. Labor rate variance. Sorry, adverse. Okay. Labor rate variance 24 to 40. Rate variance 24 to 40. Efficiency, labor efficiency variance 5040 favorable. See, I can technically leave this as homework itself, but we are just kind of doing revision. FOH expenditure variance 44,000 favorable. Volume cannot be written because you have the breakup. Wherever breakup is there, you will have to write the broken down variance and not the main variance. Expenditure, you cannot break it further. So we have written expenditure. Volume will not come in reconciliation. Efficiency and capacity will come. Efficiency and capacity will come. Whenever there is a sub breakup possible, even labor efficiency will not come if you have mix and yield. If you have mix and yield, write mix and yield rather than writing the efficiency. Any doubts on this? So expenditure is written, efficiency, capacity both are favorable, 2016 and 1440. So FOH efficiency variance, don't look at the solution, there we have taken it as variable over it. FOH capacity both are favorable, 2016 1440. Once you add favorable, deduct adverse, you should get that 2,99,000 whatever we got earlier. Add favorable, deduct adverse, actual profit. Two 99, 216. We're getting 299, 576 earlier. It should not even small difference. Is there any variance incorrect? 45? No, no, that you are checking. This is for 44,000 only. I don't know. Correct only. How much is labor rate? 23? Okay, now it is coming. The solution has calculated variable overhead expenditure and efficiency. We have done fixed overhead expenditure, efficiency and capacity. Both will give different answer. Overall total is 47,456, but any doubts on this? Clear? Can you proceed? Ideally, both will give the same answer. That's what. So, labor rate, I wrote the incorrect number. That is why you saw some difference. Any doubts on this? Can you proceed? Clear? Yeah. I'll do the next two parts after a break of 10 minutes. So, we'll take a break and then resume and close those two parts. Okay. let's move to part 4 and part 5 of the question. Part 4 is something which you are aware of. It says an incentive scheme is an operation whereby employees are paid a bonus of 50% of hours saved at standard direct labor hour rate. In simple words, bonus is equal to 50% of time saved into SR per hour at standard rate. In other words, we are following Halsey system. Halsey system is where the bonus is equal to 50% of time saved into rate per hour. That rate per hour you have to answer. That rate per hour can be this 3 rupees, which is the standard rate. And the rate per hour can be actual rate, which is 3. Can you do 387, 480 divided by 121, 200? 387, 480. So it can be either of the rates. Question is very clear saying that you will pay bonus at the rate of standard direct labor hour rate. Now write bonus equal to 50% of time saved into SR per hour. 50% of time saved into SR per hour. 50% into time saved is standard time compared with actual time. We have done all this in the labor chapter. What is the standard time? How much is SH? 880. H into 3 rupees. Into 3 rupees. How much is the bonus? Two thousand favorable. Sorry, no, there's no favorable here. This is nothing but, in short, 50% of labor efficiency variance. This is simple words. It is 50% of labor efficiency variance, because if laborers are efficient, you are paying them 50% of that. Clear? Last requirement, material purchase price variance. Material purchase price variance. Now, when we calculate price variance, what is the formula? Tell me the formula for price variance. Don't write anything. SP into AQ. Now, this AQ we use is quantity consumed. Material purchase price variance is very simple. SP into AQP. What is AQP? Is actual quantity purchased. AQP is actual quantity purchased minus AP into AQP, actual quantity purchased. The same formula, but we'll have to use quantity purchased. Normally we use quantity consumed. Normally we use quantity consumed. You'll have to use quantity purchased. 4 point, what is the standard price? Tell me the standard price. Into what is the quantity purchased, not consumed, purchased one. 2 lakh minus AP is 4.5 into 2 lakh. When we do material price variance, that time we use 2 lakh something, 2 lakh 4,000 or whatever was the number, whatever was the quantity consumed was used. Material purchase price variance formula is SP into AQP, AP into normal formula is SP into AQC. What is AQC? Is actual quantity consumed minus AP into actual quantity consumed. Here you will have to use quantity purchased. Tell me the answer. 67. Okay. Actual quantity purchased. Can you proceed? Any doubts on this? We're done with this question. One more question is pending, but I'll keep that question as discussion question rather than full solving, because I don't want to spend another 40 minutes will go in this. Today I thought we'll complete standard costing and start with budgetary control, but I'll discuss this question, close it, and I want to complete the theory part also. We have still theory questions to be discussed. So go through 41 first. You go through the question. Go through the question. Okay, I'll start explaining the question. Doing the variances will take away again the same amount of time. Every question, if you have to do comprehensive in class, it will take me around 30-40 minutes. So I don't want to spend that much time on this question. But this question has certain important things. That's why I'm not giving it as homework. Let's start discussing it. Direct material 600. Only thing is I don't know the breakup of 600. How much is rate? How much is the quantity? They have not given as of now. Skilled 120 at 80 per hour. I can write this as 1.5 hours at 80 per hour. 120, the breakup is 1.5 hours into 80. They have told 80 is the rate. So number of hours is 1.5 hours. So indirectly the standard equation for skilled labor is 1 unit is equal to 1.5 hours. 1 unit is equal to 1.5 hours. Unskilled is also 1.5 hours. Unskilled is also 1.5. The breakup of 90 is 1.5 into 60. Put together, labor hours per unit is 3. Put together, the labor hours per unit is 3. 1.5 hours of skilled, 1.5 hours of unskilled, which I can say 3 hours at 25 per hour. That's how the 75 is given. The breakup is 3 hours at the rate of 75, and this is 3 hours at the rate of 10. 3 hours at the rate of 10, because 30 is given in the question. What is the use of this? 25 is SR per hour, 10 is SR per hour, 75 is SR per unit, 30 is SR per unit. This is for variable overhead and fixed overhead. When it comes to labor, standard equation for skilled is 1.5 R equal to 1 unit. Unskilled is 1.5 into 1 unit, or if you want to do it together, 3 R's equal to 1 unit. Get the answer and split skilled unskilled 50-50. Both are 50-50. Rate is 80 per hour and 60 per hour. During the month just ended, the actual labor cost is 87.555. Can you divide 577,500 by 87.5? 6,000. And unskilled divide by, and let me know the number of hours. 5,000. This is actual hours. This is actual hours. Question says 10% of the labor time was lost due to idle time. In a normal scenario, from the 6,600 and 5,400, if you subtract 10%, that is actual hours worked. If you subtract 10% is actual hours worked. But question says standard idle time is 7.5%, which means the idle time is not 10%. Idle time is only 2.5%. Idle time is only 2.5%. So from this, if you subtract 2.5%, you will get actual hours worked. You will get actual hours worked because 7.5% is anyway known fact. Anything beyond, if question says 10%, 7.5% of the labor time was lost due to idle time, standard labor idle time is 7.5%. This is a problem without idle time. If both were 7.5, 7.5, this is a problem without idle time. And if it was 5%, then technically idle time is negative 2.5%. Idle time technically becomes negative 2.5%. We will not see such situation. So in this case, idle time is only 2.5%. Has budgeted to produce 4,200 units, absorbs the overhead on direct labor as effective hours basis, actual fixed overhead. They have not asked anything related to material variances and anything related to fixed overhead variances. No material variance, no fixed overhead. Material good they have not asked because I don't know the breakup. That 600 breakup was not possible. Fixed maybe to save time they have not asked us in the question, but fixed you can do the calculation. Material you cannot do the calculation also because they have not given us the information to do. So this problem, if you see, this 80 and 60 I copy pasted 4 places, 87.5 and 55 at one place. You divided and told me the rate, that is AHP. You divided and told me that number of hours. In that, if you subtract 2.5%, if you subtract 2.5%, that is AHW. Total of AHW in 50-50 is RSH. Total of AHW in 50-50 is RSH, and your SH is 1 unit is equal to 1.5 hours. 4,000 units is equal to how much? 1 unit is equal to 1.5 hours. 4,000 unit is equal to how much? Nothing for you to note down. Be in listen mode. If you have doubt, let me know, because you will spend time on doing calculation, which I don't want to do. Next, when you do variable overhead variances, I have told we'll copy paste SH and AH. AH means AHW. AH always means AHW because there is no concept of idle time there. So SH means 6,000 plus 6,000 you copy paste, and AH means copy paste 6,435 plus 5,265. So you will see here copy pasted this 6,000 plus 6,000, whatever that number 6,235, whatever that number, added that is copy pasted here. So then you calculate the variances. That and all is normal calculation. Any doubts on this? Any doubts on the most important learning is only 2.5% is idle time. And when you read the question itself, if you create this 1.5 hours at 80 per hour, 1.5 hours at 60 per hour, it becomes fairly simple. It becomes fairly simple for us to do it. I'll wait for maybe 2-3 minutes. You can go through the full solution. If you have doubt in any of the number, let me know. 2-3 minutes for you to go through. Any number, if there's a doubt, let me know. Once this is done, I'll then discuss the theory question. I'm not sure I'll start budgetary control, but I'll start discussing the theory question of standard costing. Let's see how much time that takes. Any number, if there is a doubt, let me know. Again, I'm repeating, standard costing will become very simple if you understand the formula, understand the chart. Because after doing this also, some of you are struggling with remembering the formula. Initial classes, I told to put chart and then do it, but that much flexibility is not there as we do more questions. In exam, if you want to do chart, you can do it. So students keep asking me in exam, if you want to put the chart, put it. It's your wish how you manage time. Okay, I'll proceed ahead now. Let's quickly discuss the theory questions. Once theory is completed, either we wind up early or I move to budgetary control. We'll take a call once that is done. Okay. So I'll start discussing the question. For some, I'll give notes. For some, I think the notes are already written. What is standard cost? This is something we have already seen. There is a difference between standard cost and budgeted cost. Practically speaking, these two terms can be interchangeably used. You can use the term standard cost, you can use the term budgeted cost, you can use the term planned cost, you can use the term forecasted cost. So all these terms are interchangeably used. The only difference is standard cost is always calculated for actual output. The term standard cost per unit, budgeted cost per unit, planned cost per unit, forecasted cost per unit, predetermined cost per unit, everything is same. At a per unit, everything is same. There is no difference. But only thing is the standard cost overall and budgeted cost overall has a difference. Standard cost is calculated for actual output. Budgeted cost is calculated for budgeted output. So standard cost refers to the planned unit cost. Unit is per unit. Unit is per unit of a product, component, service. In case of Bharadwaj Institute, it is service. In case of manufacturing company, it is a product or a component. Standard costs are established to evaluate the performance of a cost center or a responsibility center. A responsibility center can be a cost center, can be a profit center, can be an investment center, can be a revenue center. For our problems, we have just focused on cost center. One problem we did a profit reconciliation. So you can do a profit reconciliation also, you can do a cost reconciliation also, or you can do only sales reconciliation. Sales reconciliation was out of your syllabus, so that's why we haven't discussed it. But I can do reconciliation. Purpose of doing reconciliation is very simple. Control cost and establish selling prices, because once I find the deviations, I'll let it will give me an idea as to what is going wrong. Now go to the theory note. You would have written a lot of charts. After the charts, now we are writing the theory part. Theory part. Standard cost. Standard cost. Standard cost refers to the planned unit cost. Refers to the planned unit cost. Refers to the planned unit cost. Purpose of standard cost. Purpose of standard cost is to evaluate performance. Is to evaluate performance, comma, control cost, and establish selling price. Control cost and establish selling price. Control cost and establish selling price. For example, Bharadwaj Institute, when we told you fees, for telling the fees, the first thing we would have decided is what is the standard cost per student. We would have estimated the predetermined or the planned cost. Without knowing the planned cost, I cannot tell you what is the fees we are going to charge you. So we would have done some estimation. We would have taken a call saying that so many students will be there, so much will be the material cost, so much will be the labor cost. Every problem, the comprehensive question, we started with a standard cost sheet. That is always determined at the beginning of the period. Clear? Any doubts on this? Next, explain the need for standard costing. Now, why should I do standard costing? I've already told you multiple times that I want you to prepare a study plan. Why is that study plan needed? Without having a study plan, you do not know whether you're going in the right direction or in the wrong direction. Nobody knows it. As time passes by, when I started my costing classes and now we are at this stage, you see the gap between your exams. The gap is coming down. As you come closer to the exam, then only that seriousness many a times comes. But if you had a plan in place, you will know whether you are going in the right direction or in the wrong direction. If you are going in the wrong direction, you will take a corrective action. That is what standard costing does, whether we are going in the right direction or in the wrong direction. So standard costing is a method of costing which measures the performance by comparing the actual with the standard, analyze the variation and reporting of variances. Now, just to give an example, last 1 week we couldn't take class, so it's a variation, but it is an unavoidable variation. So there can be any reason. Now I will not worry about this unavoidable variation, but I've already told you next week we are planning to take class extra half an hour. The reason is very simple. I want to compensate the time which is lost. So unless I have that plan in place, I cannot take all this action. I cannot wait for the last day. If we have committed saying that we'll complete your syllabus by March mid or March end, I cannot go to the March mid or March end and suddenly say no, we are not able to complete syllabus, so we need extra time. So that planning has to be there on a continuous basis. There was some plan on a continuous basis, and that is why that extra half an hour was asked, because I don't want to deviate at the last day. So I want to have my plan in place so that we are able to complete things on time. So standard costing does not end with only computation of variances. It will also extend fixation of responsibility. You will see in one of the question who is responsible. For example, price variance, purchase manager is responsible. Usage variance, production manager is responsible. So somebody is going to be given responsibility for every variance. Following are the benefits of standard costing: prediction of future cost, provide target to be achieved, used in budgeting and performance evaluation, interim profit measurement and inventory valuation. So I'll be able to, most of the times in the practical world, I don't even calculate the actual cost. My profit is very simple. In that problem, we did 40,000 units is sold. 40,000 into 8.4 is the profit, because I had my plan. I had my plan. In reality, if you deviate, calculate variances and then see what is happening. Next, need for standard costing. Need for standard costing. Guidance for future performance. Guidance for future performance and corrective action. guidance for future performance, and corrective action can be taken based on variances. Corrective action can be taken based on variances. Interim profit measurement is possible. Interim profit measurement is possible. Fixation of responsibility for variances. Fixation of responsibility for variances. See, ideal situation, just calculating variance does not help, because after calculating variance, the next step is very critical, which you cannot do it in your when in class. We cannot see that. In a practical world, once variance is computed, you will call the production manager, you will call the purchase manager, understand from him what has gone wrong, either change the standard or see how you can make improvements. So that's the next step. Clear? Any doubts on this? Now, what are the different types of standards? We kept on saying that standards need to be fixed. When we did overage chapter, in the overage chapter, if you remember, there was one area where the formula is budgeted overage by budgeted suitable base. The base can be of different thing. There were four forms of capacity: normal capacity, practical capacity, actual capacity, and ideal capacity, or the maximum capacity. So when you fix standards, you can fix different type of standards. Ideal standards is very difficult to achieve. Ideal standard represents the level of performance attainable when prices for material and labor are most favorable. That is, this ideal standards assumes that the cost will be the lowest cost. The cost is going to be the lowest cost. When the highest output is achieved, maximum efficiency and utilization of resources is done. If you consider ideal standards as standard cost, all variances will be adverse. All variances will turn out to be adverse, because ideal is the maximum possible performance. So that is like your maximum capacity of your labor, of your overage chapter. Maximum capacity is 24 hours working, 365 days working. What is ideal standard is everybody works on, that is 24 hours working, 365 days, whatever you produce you're able to sell, you're able to buy the product at the lowest price. So this is not what is followed as standard. This is not what is followed as standard. Normal standards is standards that are achievable under normal operating condition. If what is, just to give an example, ideal standard is me taking class for continuous 12 hours without any break. Not possible. If I take 12 hours without any break, not possible for me to deliver also, and very difficult for students also. Normal is considering the situation. 12 hours itself is not possible. So normal is okay. We can take maybe a 6-hour class or a 5-hour class. There also we change faculties. We try to do, keep it as two different faculty. We also give break in between. That is normal standard. Basic or bogey standard. What is basic or bogey standard is you are trying to keep standards which are remaining constant or unaltered. Constant or unaltered. This is not logical. What is constant or unaltered is whatever the floods happened, the flood would need me to change the standard. The floods would need me to change the standards. I cannot say that I planned something, so please keep that only. I planned something, it is not going to work now, so it will need the standards to change. Whenever basic standards are used, variances are not calculated, but the actual cost is expressed as a percentage of basic cost. Whatever was your planned cost, you express it as a percentage. Ideally, we do not follow this. Either this or this. Current standards, this reflects the management's anticipation of what actual cost will be for current period. Variances arising from the expected standards represent the degree of efficiency and usage, variation in prices paid for material, and difference. This is what will mostly be used by organization. Current standard. So what was my standard 1 week back? or maybe 2 weeks back, ideally it would have undergone a change for the last week, because you know what happened in the last week. So you cannot keep working with whatever was the plan. Now write different types of standards. Different types of standards. Ideal standards. Standards which are achievable, which are achievable when company works at, when company works at maximum efficiency, procures resources at lowest cost. Normal standard. Normal standard. Standard which is achievable under normal operating conditions. Standard which is achievable under normal operating conditions. Basic standard. Basic standard. Basic standard. Standard which remains constant, which remains constant and is not altered, which remains constant and is not altered, which remains constant and is not altered. Clear? Next is current standard. This reflect, this reflect management expectation, management expectation of the performance, management expectation of the performance, and this is used, and this is used as, this is used as standard for performance evaluation. This is what is preferred. This is used as standard for performance evaluation. Used as standard for performance evaluation. This is what is preferred by organization to use for performance evaluation. Clear? Any doubts on this? You can even go with normal, but this is what ideally they'll do. Process of standard costing, I think self-explanatory, but still we'll write a note. First you set the standard, that is you decide your plan, see what is happening in the actual, compare them, calculate variances, find out the reason, Once you investigate, you'll find out what is disposition of variances. Once you investigate, you'll find whether it's a controllable variance or a uncontrollable variance. For example, last week what happened is an uncontrollable variance for us. Last week what happened was an uncontrollable variance. Now I cannot penalize anyone for that. But if I'm losing a lot of hours in this week, then it is a controllable. The whoever has been the reason for loss of time would be questioned on that. That why are we not taking proper classes during this week? Last week was impossible because of XYZ reason. So disposition is finding out the reason and making someone responsible, or if it's abnormal, then change the standard. Go ahead and change the standard. Process of standard costing. Process of standard costing. Setting of standard plus setting of standard, measurement of actual performance, measurement of actual performance, comparison of performance, comparison of performance, comparison of performance, investigation of variances, and disposition of variances. You will have to give someone responsibility for that. Investigation and disposition of variances. You'll have to dispose them either as controllable or uncontrollable. Clear? Any doubts on this? Next is, what are the types of variances? We have different category. Favorable and adverse, you know. Favorable is something which reduces the cost or increases the profit. Adverse is something which is going to increase the cost or reduce the profit. So favorable variances are those which are profitable for the company. Adverse variances are those which cause loss to the company. Nothing to be explained there. Controllable and uncontrollable. What is controllable and uncontrollable? I'll give you an example. My raw material is sugar. So my plan was that I want to buy sugar at the rate of 40 rupees per kg. That was my plan. So plan is SP is 40 per kg. AP is 60 per kg. So 20 rupees variance has happened. I'm questioning the purchase manager. But then I get to know that there was a sugar scarcity in the economy. Some sugar production got down because of some reason, and the prices in the market went up to 80 rupees per kg. But still, this guy managed because of his contacts or something to get it at 60. So in this case, you should not penalize the person. You should in fact reward the person, because what was the original plan was 40. The new plan should be 80, and 80 versus 60 comparison is controllable. 40 versus 80 comparison is uncontrollable. 40 versus the 80 comparison is, this you learn at final level, called as planning variance and operating variance. So purpose of standard costing is to investigate the reasons for significant variation, which can be controlled by departmental heads, whereas uncontrollable are those which are beyond their control. Responsibility will only be fixed for controllable variance. If there is a significant uncontrollable variance, then go ahead and change the standard. Don't tell me standard price is 40. Tell me standard price is 80 now. Tell me the standard price to be 80. It is no more 40. This revision in standard is called planning variance, which you learn at final level. You will be learning that at final level. Let's write types of variances. types of variances: controllable versus uncontrollable, controllable versus uncontrollable, controllable variance, controllable variance controllable variance is due to controllable variance is due to factors which are under control of departmental head, which are under control of departmental head plus departmental head will be made responsible for this. Departmental head will be made responsible for this. Uncontrollable variance is due to factors which are beyond the control. You can quickly write this: no responsibility fixed for this. In fact, just add one line: standards may change. Standards may change if there is a significant uncontrollable variance. Clear? Next, favorable versus adverse. Favorable versus adverse. Favorable favorable variance is due to a favorable variance is profitable for the company. It's profitable for the company, and adverse variances loss making for the company. Anything can come as an MCQ. That's the reason we are discussing all this. Something from this can come as an MCQ, different types of standards. So more focus should be on understanding the thing rather than by hearting it. Anything can come in multiple choice question. Any doubts on this? Can you proceed? Done? Almost done, I think. Others will be fairly simple. This chart is something we have already written. Differentiate standard cost and budgeted cost. We already wrote this here. I think initially when we were writing, Budgeted cost refers to the cost to be incurred, standard cost, and we gave an example. So that example is also there. Who is to be held responsible for various variances? This is very critical because it can come as an MCQ. Price variance, purchase department; usage variance, production department; labor rate variance, HR manager; labor efficiency, again it can go to production or foreman. Who is a foreman? Is he's responsible for production. Foreman is a person who is responsible for the production. Let's write responsibility part. This can come as MCQ. Material price variance, responsibility, material price variance, purchase department slash purchase manager. So it says department, but there will be a purchase manager. Material usage variance, material usage variance, production department slash production manager. Prices purchase department or purchase manager. Production is or usage is production department or production manager. Labor rate variance, personal department. You can call it as personal, you can call it as HR, you can call it as manpower slash manager. Either the department or the manager. Personal department, HR department, manpower department, different names can be given. Either the department is responsible or its manager, mostly the manager. And labor efficiency, production department manager or foreman. Foreman is a person who is responsible to take care of the efficiency of labor. Clear? Can you proceed? Next, what are the advantages and criticism of standard costing? Standard costing, we have learned a lot of things. So there are many advantages. One, it gives you a warning sign as to what is going wrong. It gives you a guidance as to how you can proceed ahead. It also is helpful in measuring the performance and cost control. So serves as a basis for measuring operating performance and cost control. Predict cost, hence fix the price. Evaluation of jobs, inventory valuation. We did one problem that 960 units into 33.60, that was with this standard costing understanding. Measurement of profits, basically it will give you a guidance and it will help you in taking corrective action. These are the two important points. Aids in business planning, budgeting, managerial decision making, standardization, provides objectives and targets that becomes a guidance for the employee. Uniform basis for comparison, wastage and all can be controlled. Now criticism is, many a times there are two three things. One is, a lot of times the standards may become redundant. You fix something but in reality that standard is not going to work because a lot of changes have happened. Example, when COVID came in, those standards were of no use because of the changes. Second, if output changes significantly, see, when I do my cost calculation, I've assumed that the cost will be 20 rupees per unit, but if you are doubling your production, 20 per unit can even become 18 per unit because of economies of scale benefits. So when there is a variation in prices, one of the chief problem faced in the operation of standard costing is the precise estimation of likely prices. Varying levels of output, if there is a varying levels of output, if the standard level of output is not achieved, then it will not be possible to achieve the standard cost for fixed overheads. Hence the variation will be significant. Changing technology, mix of product, sometimes fixing the standard itself can be difficult. But according to me, one more issue is, many a times you fix the standard, that is, I told you, fix the plan. Fixing the plan alone will not give you any result. After fixing the plan, you will have to measure your actual performance and take corrective action. Many a times that is also not done by organization. You just fix the standard and leave it. Fixing the plan alone will not help you in your preparation. After fixing the plan, you will have to take all the corrective action based on your actual performance. Okay, I think that's all. After this, these are the charts which you wrote. The chart is not there, only the formula is there in this part. This is just to, in case you want to refer the formula. Let's just write the note on this one. Advantages and criticism. And criticism. Advantages and criticism of standard costing. Advantages and criticism. Advantages. Advantages. Performance evaluation. Performance evaluation. Profit computation. Just give me a minute. Hello. Performance evaluation, profit computation, selling price fixation, selling price fixation, inventory valuation, inventory valuation, guidance slash targets slash objectives for the company. It gives you the guidance, or the target, or the objective. This should do cost control, waste minimization. Cost control, waste minimization. These are the advantages. Criticisms. Criticisms. Variation in prices. Variation in prices. Variation in output. Prices, output. Changes in technology. This is not a big problem. Change in technology doesn't happen all immediately. It is something which would be planned by the organization. Changes in product mix. Changes in product mix. Difficulty in fixing standards. Sometimes there can be a genuine difficulty in fixing the standards itself. Clear? I'm kind of done with standard costing. I don't have time to start budgetary control. Tomorrow's session we'll start budgetary control. Ideally budgetary control should get over in the tomorrow. We have two sessions, so we'll see. Mostly budgetary control will get over. The theory part would be pending, so we'll see that in the next session. Okay, thank you friends.